We're going to get to a couple of your stock picks in just a moment, but first of all, your overall market outlook for the next 12 months, constructive or cautious?
I would say cautious, right? I mean, it's an environment where valuations are rich. It's been a very good couple of years from a total return perspective, but I do think earnings growth next year in 2022 probably, slows down pretty dramatically from the really robust growth we had this year. And then I think the combination of less stimulus, probably means, the combination of 22 and 23 is not a great environment. So probably a little more cautious than normal. We tend to like to get pretty aggressive when there's kind of blood in the streets, and there's not a lot of blood in the streets these days.
So let's get into some of your stock picks that you're going to bring us today. The first one is in the industrial space.
Sure. Yeah, I think one of my favorite ideas, and actually our largest bet in the portfolio today is GE. GE is a company that's trading at a massive discount to kind of some of the parts. GE has announced the spin off into 3 different entities here in the next couple of years. And I think actually all 3 of the entities are probably going to be very well positioned over the next 5 and 10 years. So we're really positive on GE. We think that's a 50% upside over the next 2+ years, and we're very good. We're very positive there.
So what are investors not appreciating about that story? Which it seems like there's been movement and pushing for this for a long time, and they finally announced it, and it hasn't really perked up the stock.
Well, I think what's happened, obviously, we had this horrible Omicron COVID situation kind of developed. That's really hurt them and hurt a number of other companies that are kind of travel related. But I think what's interesting is, you think about the healthcare business, accelerating organic growth from low to mid-single digits or mid-single digits. The aviation business, probably the best outlook for any industrial out there for the next kind of 5 and 10 years, kind of probably double the organic growth rate of most industrials. And even the renewables business and power business, I think the hydrogen economy, and as well as kind of having a big software business there, I think all 3 of those businesses are extraordinarily well positioned to benefit over the next the stock will outperform the next couple of years, but I think the next 10-year story for all 3 entities is very, very positive.
What's your top pick of the big cap tech names?
Actually, I really like Amazon. If you asked me a year ago, we would have talked about Google, but Google's had a really good run. We still like Google quite a bit, but Amazon is 2 quarters away from an acceleration in organic growth rate. So when you have a combination of company that's kind of a good business, and AWS is an amazing business, and you have kind of, it's underperformed, and you have a clear sight of revenue acceleration, re-acceleration, kind of starting in Q2 of 2022, that's going to be a good stock for 2022. It's been a laggard, but it's something we've been adding to and we feel really good about.
It's basically been going nowhere. And bears will say, well, the AWS growth rate is slowing as they have increasing competition with Microsoft and a lot of others on cloud, and digital spending or shipping and buying has peaked during the pandemic.
Well, remember, AWS, actually, they're the one cloud player in the last 4 quarters where their organic growth has been accelerating, right? You haven't seen that out of the other 2 cloud providers. I would have expected Azure and Microsoft, I would have expected Google to have faster growth. But what you're seeing is actually Amazon's kind of, they're the one player whose organic growth rate's actually been accelerating in the last 4 quarters. So AWS's competitive moat and competitive share is actually getting better, if anything, in the environment. So there's a case to be made that, buying Amazon today, if you think out 3 to 5 years, at 3,400, that's probably the value of AWS kind of 4 or 5 years down the road. So you're not getting exactly the rest of the business for free with $700 billion of GMV for next year, but you're getting kind of close. So some of the parts is becoming really compelling on Amazon.
And let's get your final pick in the power space, utility space.
Yeah, again, we like to buy into uncertainty. Right now, everybody's concerned about rates, everybody's concerned about inflation. There's probably no better utility out there positioned for the next 10 to 15 years than Ameren. It is going to be a 7% EPS growth company, exceptional management in the right region in the Midwest, a lot of wind and solar resources there. I think that's a compelling opportunity, a low-risk opportunity for investors over the next next 15 years.
David Giroux, thanks so much for joining us. Much appreciated.
Thank you.